Making sure your assets can be managed, whether you're here or not, is a simple process as long as you understand what's required. My name is Darius.
And I'm Carmen. In today's video, we want to give you a high-level overview of wills and trusts because this seems to be a really popular conversation inside our community. But before we get started, we have to put a huge disclaimer out there. We are by no means wills and trust professionals.
No, what we really want to do is just talk to you about it. We'll give you a high-level overview from our perspective. Basically our journey to it and what made us get our own trust.
Absolutely. So this is educational purposes only, and we want to make sure that you always consult with a lawyer prior to designing any will or trust for your family. So while you're here, go ahead and give us a thumbs up and subscribe to our YouTube channel so that you can continue to be notified every time we post new videos.
Now, what we're going to do is we're going to go into a little more detail about our personal trust inside of our community. Basically where our journey started is real estate, going to the courthouse and going through probate to see if there's any properties that's available. And there were thousands in the state of Arizona or in Phoenix, where we were at the time, of people that had their property in probate. However, some of them have been there for years. Now, this is something that I didn't want to experience once I got assets. I didn't want to experience, and a trust will allow you to not be in the situation that some of those people were in when we were looking for properties.
Yeah. So the other thing to note is many times people ask us, Carmen and Darius, should I have a trust? Does it make sense for me to have a trust? And before we can even really entertain this conversation, you have to determine your need for a trust. And really what the determining factors are going to be are your assets. When you think about it, do you have a lot of stuff going on? And do you potentially have a lot of people that those stuff could be assigned to? So when we talk about estate planning, sometimes I think the vocabulary of it all can be a little overwhelming, like, ooh, that sounds fancy.
Yeah.
But really, it just means organizing your stuff. Estate planning, organizing your stuff. Do I have houses? Do I have cars? Do I have
businesses?
Businesses, whatever it is. How can I put those all under one umbrella so that it's just organized? And if something were to happen to me, or even while I'm living, for a trust specifically, how can I make sure that all of these things stay organized?
Right. So that things continue to go even when you're not there. Like your business, make sure everybody gets paid, making sure income is still coming in in an organized way so that people's livelihood can still be maintained.
Exactly. So for this video, like we said, we're going to give you a high level overview. So we'll go into like the nitty gritty details between trusts and wills, but actually inside our community, like Darius said, today at noon Eastern, we are actually going to be sharing a sample of our trust, what it looks like. And we do this every twice a month, every other Thursday inside the Money School community. Darius and I coach our students. So you are welcome to join us. You can click on the link in the description if you want to join us today, for example. So let's go ahead and talk about wills, for example, so we don't confuse the two. Wills are a legal document that we really feel is crucial when setting up your estate, organizing everything that you have after your death. So if you were to pass, you're going to say, so-and-so gets this house, so-and-so gets this property, so-and-so gets this business. Whereas a trust is basically what you're going to create while you're living so that your assets can be organized and assigned to people and make proper arrangements around helping you manage your assets.
Right. Because I think the difference is you can say someone is going to get the house, but it could still end up in probate
potentially. Yeah.
With the trust, it won't end up in probate.
So let's go down like the biggest things that we think you need to know. So the difference between a will and a trust. So when we talk about defining beneficiaries, so if something were to be assigned to your beneficiary, right? So say, let's talk about a house, for example. I want Susie Q to get this house. A will and a trust can both do that. Now let's talk about an executor. An executor is the individual who's going to manage your assets and what's happening within your properties or your estate, so to speak, right? So a will can name your executor. The trust is not going to name the executor. So who can designate guardianship for children who are minors? Wills can state that, trusts cannot. Okay, making sure that you understand the difference. Basically the handling for minors as beneficiaries. So if little Jimmy is a minor, but you want little Jimmy to acquire your assets, what's going to happen with the wills is they are going to appoint someone to manage the assets until little Jimmy is of legal age. Whereas a trust can maintain that asset inside the trust until the beneficiary becomes of legal age. So I know we're going lightning fast, but these are like, again, the things that you need to know. Public record. What is public record versus not? Wills will not keep your information as public record, whereas trust will.
Right. So like when we went probate for real estate, we had the people that we can call to say, hey, do you want to sell this house? Because it was public record.
We had everything.
Yeah. What trusts allow you to do is to keep that information out of public record.
Very much so, which goes right into probate, what you were talking about. So requires probate. It's not a guarantee that if you have a will that your assets will stay out of probate. So that's really important to know. We actually just learned this tidbit not too long ago because we assumed that a will, if it's clearly stated that it would stay out of probate, but that's not always the case. And again, it's important that you speak to a lawyer about this information. Excuse me. And then the trust. So if we think about a trust, if you have all of your estate in line with a trust, it can stay out of probate. Now, conservatorship. What is conservatorship? That means that you have a guardian over someone who potentially has like a mental illness or needs more assistance. So a will cannot assign that, but a trust can. And then going back to attorneys is which situation needs attorney. Some simple wills really don't need attorneys, but trusts will always need attorney involvement in order for it to be set up. So we hope that, just rattling down these simple pieces of information will help you determine really how you want to plan your estate. Do you need something a little bit more complex like a trust, or could you get along something just fine as a will?
Right. So in our situation, what we wanted to do is we initially had life insurance policies, and having life insurance policies in itself wasn't a reason just to get wills. Mm-hmm. I mean, get trusts. Mm-hmm. As our business started to grow and we started to have multiple businesses, it was important for us to put our businesses in a trust along with our life insurance policy, and because we have an inheritance. Mm-hmm. So we wanted the inheritance to be named to our trust instead of us individually. Mm-hmm. So because we have assets now that we can put into those trusts, it's not as simple as having a will, because remember, one of the things that Carmen was rallying off is that you can do a will for simple estate planning. Mm-hmm. Our estate now isn't simple. Mm-hmm. So we opted to do the trust route because at the time, we also had a daughter that had some health issues, and if anything happened to us, we wanted to make sure that she was taken care of, and not that tidbit be put into the court system.
Absolutely. I would say having children is really what changed our mindset shift as far as trust goes. Mm-hmm. Because before then, things were pretty simple as far as our estate was concerned.
Because we didn't have much.
Yeah. And the biggest thing I would say is really, like you were saying with our daughter who had some disabilities, we actually really understood trust through needing a trust for disabilities and being able to manage that and make sure that her needs were met should we not be here. Mm-hmm. So whatever your inspiration or your motivation is around trust, you really need to make sure that it's worth the investment. The reason being is because the next question probably many of you have is, how much do trusts cost to set up? And we've seen the cheapest $1,000 on up, and you can get real creative and real complex with how these trust structures work. So again, you have to make sure that you have enough assets and business, really estate, to make sense for you to maintain this cost. Because the other thing you have to think about, there are going to be fees that you have to maintain with paying your attorney, with all your estate planning fees and all of that. So this is an ongoing thing. It's not necessarily a one-stop shop where you're just going to set it up and you set it and forget it.
Yeah, I think it's really good that you said that, because in some cases it may be expensive initially to set up a trust, mm-hmm. but and going in probate and the fees associated with probate and taxes, it may make sense for you to put your assets inside of a trust because it may be cheaper for you.
Totally.
But you have to talk to an attorney or an accountant, attorney and an accountant to understand your options and your unique situation.
Absolutely. Was there anything else that you wanted to share as far as trust goes? Because the other thing that we do with our lives is we answer questions directly from our viewers. Was there anything else you wanted to add for that?
No.
Okay. So what we decided to do with these lives, folks, is we really like to be able to engage with our community. And again, like we said, there is so much spam going in the comments. So we want to make sure that we're actually able to answer your questions directly. So the thing to really note is that we will never comment in the comments asking you to contact us. All of our contact information can be found by just looking in the description of all of our videos. So we hope that, segueing to this next section of just questions with our viewers, that the first half of this video was helpful in answering your questions about wills and trusts and maybe the need for them. And again, like we said, Inside the Money School today at noon Eastern, we will be doing a coaching call, sharing more in-depth information as far as trusts, how ours could look, how yours could look as far as the complexities are concerned. So we hope that you join us. And again, you can click on the description if you decide to join the Wealth Nation community. So let's go ahead and jump into our first question from our viewer. And his name is Roy Baez, 5867. And he says, I watch a lot of your videos and I haven't heard you say how long you are typically paying into your policy before you have enough cash value to take the money out, from a down payment on a real estate. How much per month roughly are we talking about, and how long before you can take the money out?
So you can leverage the money in the very first year. So all of our policies are annual. Our very first policy, we had about a little close to $6,000 available, and we took that the very first year to pay off some of our debt.
And that premium, Roy, was $10,000. So we paid $10,000 to have a little less than $6,000 available.
And that was 7 years ago. Now we've used our system for not just credit card debt, we also used it for real estate. But the real estate deals that we've done, it depends on the real estate, because I know, for example, we were able to invest in property in South Carolina that was a little cheaper than investing in property in Arizona. So our down payment or just buying a house was a lot cheaper. So $10,000 did us pretty good in that market. We just recently put $50K on a deal, and it came out through our policy. But our policies we've had for 7 years. We started our first policy 7 years ago. So it really depends on your policy. It depends on you and what you want to use it for. Without any numbers, it's hard to say. I could just give you the example that we used.
Yeah. And we get this question a lot as far as like, how can I use my policy for a down payment on real estate? And really, if we want to be realistic, like we said, we don't know how much premium you want to pay, but if you want to put a down payment on a real estate property, we're thinking $20,000+ potentially. You need to have a larger premium in order to be able to take out that much cash. And if you can't afford a larger premium like that, then we always say start with what you got. Like we started with $10,000. We had roughly $6,000 to play with, and we used $6,000 to do damage in our prospective investment opportunities with what we had. For us, we were using it to pay off debt immediately, but as we started to be able to cash flow, we were able to take more and more of that money and start it for investing.
Yeah, I think we should let you know that you should look at how you use these policies as a long-term system, not in the short term. You want to put your money into a life insurance policy and then get it out immediately. I mean, in that situation, just use the money for an investment. For the investment outright, because for immediate return on your money, or for the immediate benefit that you're looking for, a life insurance policy isn't going to give you that.
Yeah,
honestly.
Yeah, it is
not one that you're going to have the rest of your life.
So moving on to the Muslim passport, who do you get your whole life policies through? So Darius, myself, and we have 7 other agents on the Wealth Nation team. We are licensed through Mass Mutual and Security Mutual Life currently at the time of making this video. So if you're interested in setting up policies designed for high cash value, then definitely hit us up. in the description. So the next question, did you have something else you wanted to add?
No.
Okay, perfect. So do I need to pay my loan back as soon as possible? So, okay.
Yes.
Yes.
Yes, because if you're not making money from anything else, you're losing money from the outstanding loan that you have.
Yeah. I was hesitating because I wanted to make sure that I chose my words wisely. Absolutely, you need to pay your loan back as soon as you can. You also need to know that there are different opportunities for you to pay your loan back in the sense of like your payment terms.
All loans you should pay back as soon as possible.
Oh yeah. But I mean, like for example, when we had over 6 figures in debt, and we were paying it all back. It took us probably about 4.5 years to pay all of the loans back, right? So when I say pay it back ASAP, we weren't able to pay our loan back in 30 days, but we had a strict plan in place that the repayments were coming, but it just took us a long period of time to pay it back.
Yeah, based on the question, if you get a loan and you're just getting a loan just for I don't know. So do I need to pay my loan back as soon as possible? What is that asking you?
It's a little vague. Yes.
Yes.
Yes. The question is always pay it back as soon as you can. You always should have a plan and know that there's flexibility in this process, which is why we love the infinite banking concept so much, is because it allows us the flexibility that we need.
Next question. It is extremely important to know that insurance agents make much more money selling whole life insurance policies. Much more money.
We intentionally pulled this out because we get this a lot. And I don't understand why people are so focused on our pockets or other insurance agents' pockets. But yes, I guess. I mean, it's really what it is like you have to think about everything in life. I mean, everybody makes money from something that you do, right? Don't you go to work and make money? We go to work and make money. So
yeah, you buy groceries and somebody makes money.
Yeah, when people ask us about like, you make more money than this person, like it's all relative. And I think if you want to compare it to like, if you go to a Honda dealership and you go to a Mercedes dealership, for example, a Honda is going to cost so much, which is term insurance, and a Mercedes is going to cost so much, which may be whole life insurance because it's more expensive. I'm only using those scenarios because in the same case, they're both life insurance. The example that I'm giving, they're both cars that get you to and from, but some have more features than the other and going to cost more money. So with the thing that you're buying that costs more money, sometimes there's more commission that's associated with it, but it doesn't mean like it's at a disadvantage to you. You know what I mean? Because there's more nuances and things that people have to know when you have more features and things to manage. I would think that you would want that person to be compensated fairly so that they can help you and manage what you need. I don't know.
Yeah, I think insurance is one of the only industries where you have a client for the rest of their life.
Yeah.
And I mean, if for me personally, it's more important that I actually buy this product for myself rather than selling it. The conversation we're having is how do we use the product that we're actually selling. Mm-hmm. But if you have a client for the rest of their life, how much is that worth to everybody involved?
Yeah, think about it. So again, we just wanted to bring that up because it comes up a lot.
And the average life insurance agent only makes about $60,000.
So put that into perspective.
Yeah, it's not a business to get into for the money. Mm-mm. That's why a lot of agents do other things. Financial advisors, things of that nature is a part of their business, like an estate. Where we're talking about estate. It's a part of your estate planning to buy life insurance, but it's not your main thing. Mm-hmm. Same for us. The reason why we invest and do all the other things we do, because it's selling a life insurance policy isn't our main objective.
Mm-hmm. Yeah, I totally get that. We do it because we love it and because we want to serve other individuals. Okay, so the next thing is, how can I know how much coverage I should have? This is from Ken Davis. He says, I have a policy. So typically, Ken, what we say is you should multiply your income times 10, and that is the bare minimum that you should start with. So if you make $100,000 times 10, you should have at least $1 million in death benefit.
That's the easy way. Yeah.
Yeah, that's the easy way. And then as your income increases, you need to be thinking about adding on more coverage because that's more income that you need to insure. Mm-hmm.
Next question is, what happens if you take out money from your whole life insurance policy and then lose that money when economy turns south and real estate drops in price? Well,
Great question.
If you take out money from your life insurance policy, sounds like
if you
a
get
withdrawal.
a loan, well, if you get a loan in this situation.
Yeah. So, and there's two ways to get money from the life insurance company. It's a withdrawal where you take money out of your actual policy and you're not required to pay that back, but it reduces the amount of money that you have available in your policy. If you get a loan, what you're doing is you're getting a loan from the insurance company. And if you lose that money, then you have to pay interest on the outstanding loan that you have until you either pay that money back over time or you pass away and it's reduced from your death benefit.
Yeah, that's the easiest way. The best part about this process is, like we said, with the whole loan situation, at the end of the day, you are going to be on the hook for the loan, the principal, and the interest. So you will, I would assume, if the economy tanks, then you'll just be paying back the interest until you can, reestablish yourself where you can then pay back the entire principal. So it gives you flexibility at the end of the day. That's basically what we're saying here. So the next question is, the last question for today is, can you borrow your insurance from your insurance policy to pay your bills every month? Potentially, yes, if you have enough money inside of your cash value.
But it's not recommended.
Yeah. But again, the thing, what we have to understand, folks, is don't lose sight. When you get a loan, you have to pay the money back, right? So we're not just borrowing with the intent not to put money back. If you borrow, then you need to make sure that you establish those funds. We have done it personally, where we have used the cash value inside of our policies to pay our monthly expenses. However, we have a plan in place to pay all of those funds back every quarter with principal and interest, so that we have more money accumulating in our account than what we started with. So again, you have to understand this whole banking principle and making sure that if you get a loan, there is a plan for repayment always.
Yeah, every time you use your money, the idea is getting it back plus interest.
Absolutely. So thank you all so much for joining us for this live video that we have, where we talked about estate planning. Again, if you want to join us in our coaching call today at 12 Eastern, click on the link in the description, and we will see you next Thursday on our next live. Remember to own your own lifestyle.
Or someone else will.
Bye, guys.